AMC stock is about to short squeeze and it is coming soon. That is what the title of this article says. And I want to go over what it says because it makes a lot of sense. And on top of that, I want to talk about why AMC is up today, why the markets are up today, specifically a lot of stocks that we have been invested in over the past year are up quite dramatically today. This is a sign that there is a rotation happening right now. There is money that is leaving a lot of your safety or defensive stocks for the day and heading back into some of those riskier assets. I put them in air quotes because these value stocks are valued higher than a lot of these risky stocks, believe that or not. So which one's actually risky? That's a topic for another video, but we got a lot to talk about and I do not want to waste your time with the intro. Thank you guys for tuning in. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys want access to all of my trades in real time, I have said this and I will continue to say this. This is possibly the last great buying opportunity that you are going to see for a very long time. This is going to be your buying opportunity of '08 all over again, and you should take full advantage of it. If you guys want access to everything I'm doing, link down below in the pinned comment. Get yourself those free stocks with Webull, Moomoo, and Public as well. Link down below in the description of this video. Now let's get straight into this article because wow, it catches my attention, right? It says AMC, another short squeeze is coming soon. The summary: AMC Entertainment posted a strong Q1 2022 earnings report with improvements in revenue, EBITDA, and theater traffic. The company recently disclosed a 6.8% stake in National Sin Media Inc., which provides pre-movie advertising and marketing in theaters. AMC's short interest currently sits at around 21% and could trigger a massive short squeeze as institutions and hedge funds are buying up the stock. Now, I do want to skip around a little bit because there's some things that I do want to talk about and some things that are kind of self-explanatory, like this one. AMC is now currently down 52% year to date, so it's gotten absolutely destroyed. So even if you've seen us go back to being flat year to date, in the first 5 months of the year, you're going to go up 52%. So that would be a substantial move even from these levels that we are currently sitting at. And it says the company recently posted its Q1 2022 earnings report with some interesting information about the positive rebound in movie theater traffic and revenue. What's more interesting is that AMC's short interest remains rather high and now institutions are buying up the stock left and right. This could be the beginning of another epic short squeeze in 2022. And they go over the earnings report for AMC, and then they say overall theater attendance exceeded 39 million viewers during the quarter, while the average number of screens reached over 10 million. AMC released several key movies to start the year, including Spider-Man No Way Home, The Batman, Sonic the Hedgehog 2, and most recently Doctor Strange in the Multiverse of Madness. The company has a strong catalog of movie releases throughout the rest of 2022, including Top Gun Maverick, Jurassic World Dominion, Lightyear, Thor, Love and Thunder, Minions, The Rise of Gru, Black Panther, Wonka Forever, and the highly anticipated Avatar 2, baby. It looks like AMC has survived the toughest periods of the pandemic and could exceed Wall Street's estimates with such an impressive catalog of future releases coming up. Also, the company has made several key changes by accepting cryptocurrencies such as Bitcoin, acquiring 10 new theaters in key markets, investing $28 million in Highcroft Mining, and most recently purchasing a 6.8% stake in National Sin Media, NCMI. AMC's impressive performance has caught the attention of several high-profile Wall Street institutions who have either opened a new position in AMC stock or increased their stake. Ray Dalio's Bridgewater Capital purchased 21,700 AMC shares in Q1 2022, while the hedge fund sold its stake in Tesla. According to Fintel, Goldman Sachs increased its stake in AMC by 36% to just over 3 million shares on May 16th. Lots of institutional investors have bought AMC stock over the last few weeks, which could trigger an epic short squeeze leading up to summer 2022. Talk about high short interest could cause another short squeeze. According to Ortex, AMC has 21% short interest with 150 million shares on loan. Short sellers borrow shares and then sell them to cause the price of a security to fall in price. Their goal is to buy back the shares at a cheaper price to pocket the difference. We already know that. But it says, however, it appears as though institutions and retail investors noticed the high short interest and started buying AMC stock at around $10 per share. These short sellers must return their shares by buying back the stock, which could cause the price to soar in a hurry. The risk factors. It says it's unlikely that AMC stock will squeeze at such an aggressive pace this time around because retail stock market trading activity is much longer in 2022 when compared to last year. Basically saying it's down, but you're still seeing about roughly the same amount of inflows going into retail brokerages per day. You're still seeing over $1 billion of new money heading into the markets by retail investors. So there is a lot of retail activity. And in my personal opinion, I disagree with that very, very strongly. Considering the liquidity levels that we have in the markets, you really don't have a choice like you did back in January or in June to remain in your short positions. These hedge funds, they could have borrowed money. They could have done a multitude of different things to not cover on their short positions to service a margin call. But now everything has gotten destroyed. Bond markets destroyed more than the S&P. S&P, NASDAQ, they're both destroyed. You got private markets that are destroyed. Literally, real estate is starting to come down as well and to soften up. The only thing that's really doing well is the art market. The art market. You had a record painting that was sold in 2022. Other than that, everything is down. And when you're talking about putting collateral up for margin calls, that means margin calls are going to come a lot faster, and there's not a lot of collateral to be put up at this current moment. Now, it says, it says, I don't expect AMC shares to reach $60 again, which I strongly disagree with that, but I believe $30 is a strong possibility over the next couple of weeks. At current market prices, AMC stock could 2x or 3x from here, providing even larger gains for call option buyers. And I am going to buy some options here today in AMC stock for longer duration, probably for that June expiration, because mix this, not specifically just this article, because it's pretty much what I've been saying, but more importantly, the executive order, which if you guys have not heard about it, it is executive order 14032, and Trump had executive order 13959 in effect, and that's what caused the last rallies. Let me just read this real quick. When these securities were no longer accepted as collateral on January 27, 2021, AMC stock surged. January 27th. Let's go ahead and pull that up. And I know a lot of people have seen this, and a lot of you guys probably watched these videos, so it's probably not a surprise, but I do just want to go over it for a little bit of clarity, since this video is titled, AMC stock is about to squeeze. January 27th, the stock opened, hit a low at $11 and closed at $20. That was like virtually all of the rally that you've seen the first time around happened May 27th. And essentially what this executive order is it says, hey, you can no longer use Chinese securities as collateral for margin calls. So on top of everything else going on top of the bond market getting destroyed, stock market destroyed, real estate starting to go down, just everything going down, you can no longer use Chinese securities. That's not good. It says the order was shortly moved to May 27, 2021, where AMC stock had its second surge, reaching an all-time high of $72 per share only a few days later. And if you click on May 27th and go take a look at it, AMC stock actually went up 35.5% that same day, down 1.51% the next day, then up 22.66%, and then we had a 95% day. That's where we did open up and hit a low at $35.59 per share, and then hit a high of $72.62. So there's an obvious correlation here between using Chinese securities as collateral, and when you can't do that, it tends to look like AMC can go on these very parabolic rallies. Now, let's talk about what is happening in the markets today. The S&P is down. It's starting to approach down about 1%. The NASDAQ is now almost red. We were just up over 1% before I started recording this video. So it has been a pretty quick switch that we have seen right here, and we haven't got any news today, but this is really digestion from Target earnings, from Walmart earnings, from Home Depot earnings, from Lowe's earnings, basically saying the consumer is not in a good spot and they're not spending money the same way as they have been over the past 2 years on discretionary items. Discretionary, if you're unaware, meaning things you want but you don't necessarily need, right? That's the difference between buying that $1,000 iPhone or buying a $200 older phone, right? $1,000 iPhone, that would be discretionary. A lot of people might argue against that, but that would be a perfect example of discretionary versus non-discretionary. That's why stocks like Apple took massive hits as of yesterday alongside those retail stocks, because anything that is really sensitive to overall demand, right? That's not like business demand, but consumer demand, especially discretionary items like stocks like Apple. Those stocks took massive hits yesterday, and that's a big problem because the markets are forward looking. So they're looking ahead and saying, hey, what is the market conditions? What is the consumer conditions going to be in 6 to 12 months from now? And when you're getting alarming signs now, it's not good for the overall valuations or the prospects of companies going ahead into the future. And the unfortunate thing about this, we just got retail sales. We just got all these earnings. We're not going to get more earnings for another 2-ish months at companies like Apple, right, that control the broad market. So we're really in this weird purgatory zone where we're going to be ultra sensitive to consumer headlines until we get proven otherwise. There's a wide disconnect. Some analysts think we're heading into recession in late 2023 or second half of 2023. Some people are saying we could be in a recession right now. So long story short, the markets are very confused right now, and people are getting a little bit fearful. And the longer this goes, I think the more volatile, believe it or not, it is going to get. This is a very unusual period of time that we are living in. The Fed is raising rates. At the same time, growth is currently slowing down. That typically does not happen. The Fed usually raises rates. Like, you can't even really come up with one example of this in the near term history, right? In the last 30, 40, 50 years where the Fed did this, right? Raising rates when growth was slowing down. Usually the Fed raises rates when economic activity is really, really good. So you're in a weird environment here in the markets, and the markets don't know where to price things. They don't know how to fairly value stocks right now, and that's why you have a lot of stocks that are on massive discounts and some stocks that are overvalued. Like a lot of your value stocks, I think, are value traps. So it's trading substantially higher than they should. Like a Clorox should not trade at a 70 times price to earnings ratio, whereas a Facebook trades at about a 13 or possibly even a 10 now, or a Google trades at a 20. Comparatively to a Clorox, get the hell out of here. They are value traps. Now, there's a lot of very attractive stocks, especially AMC as of right now. But this could remain like this for a while, and it's going to be very, very volatile. We'll see, too. We are heading down and approaching that 20% year-to-date negative figure on the S&P. I believe we do go into an official bear market in the S&P when the S&P closes at about 384. And that's kind of where we seen the bounce last time around. Once we got close to that 20% down bear market status, it kind of changes the psychology of investors at that point. But we're approaching that. We're down 18.56% on the S&P. On the NASDAQ, we are well in bear market territory. We are down 27.6% year to date. We were down about 30% at the peak. We're starting to flatline out a little bit, but one more bad day, you're going to be down 30% in the NASDAQ. This is why I'm saying it's possibly one of the last great buying opportunities that we will have in a very long time, because on the back end of this, the markets are going to be so strong. If we can get through the Fed raising rates as growth is slowing down, if you can get through a pandemic pushing all the demand up front and then still seeing demand coming, throughout the next 5 to 10 years, the markets will be very, very strong. Kind of like AMC wasn't so strong over the past 2 years. They had to figure their shit out. They had to lean down operations, but now the business is thriving on a fundamental level. That's kind of what you can compare the markets to in this current state. Give it a year or two from now, acquire stakes in these companies, and then you're going to see a very strong market on the back half of this. So you definitely want to be putting more money now in the markets than not, in my personal opinion. Now, as far as AMC and the Ortex data, let's go ahead and take a gander. Go ahead and refresh this too. See if anything changed. We're looking at 21.97% short interest, 113.24 million shares that are sold short, cost to borrow max at about 4%. Utilization for like the 6th straight week in a row is at 100%. Days to cover is sitting at 3.23. So that is looking very good, looking prime for a short squeeze, especially around this executive order. And you are seeing a lot of calls going through on the option chain. Look at the interesting flow sentiment for the day. You're looking at 4 orders totaling $5.05 million, positive order value of 100%. Look at some of these too as well. January 20th, 2023, a 145 call. That's very unusual, very, very unusual. But a lot of 1350 calls, a lot of them for next week. You got some June 17th calls coming through. And that's really what I'm going to be looking at in between June 10th and June 17th calls for AMC stock, because I do firmly believe that we are going to go on another very parabolic rally here shortly. So if you guys want access to all of my trades in real time, link down below in the pinned comment for that. For tomorrow, we don't really have any economic data. I do believe we have a real estate data point that is coming out. You got some oil data that is coming out. You have retail sales month over month for Great Britain, and that could move the markets around a little bit, but I'm not convinced how much it would actually do to our markets, if that makes sense. China's second largest economy. That's why we took a massive red day, just not too long ago when China's bad retail sales came out. So we will see what happens with that. We're really going to be sensitive to the headlines that come out, Fed speakers, so on and so forth, consumer earnings, which those are pretty much done. So we're in a weird zone right now. The next Fed meeting is going to be on June 15th. And that is 4 weeks, 1 day, 15 hours, and 40 minutes away. We're expected to get that 0.5% rate hike, which I think we are firmly going to get that, maybe even a 75 basis point rate hike if the next reading of inflation is bad, which will come out about June 11th, so 4 days before the Fed meeting. And that's really going to be the next big market catalyst. So that is pretty much it. Let's take a brief look at the technicals, because it's looking very good in my personal opinion. We do want to hold above 13. We've been at about 13 over the last 3 days or so, found a little bit of resistance the 3 days prior to that. But I do think if Friday can be a strong day, then we could break out to about $15 per share. I think there's going to be a lot of people that want to get in positions that are thinking along the same lines as me, that want to go out and buy those calls. Obviously, institutional investors are on the same page as what I'm saying. And even if you look at Citadel and their 13F filings, they're massively increasing their call position to over double what their put position is. They did reduce their share position that was already relatively small, still owning 88,000 shares, but look at their call position, controlling almost 10 million shares. Their put position is controlling almost 5 million shares, double the amount of call exposure than put exposure, even Citadel of all people. So I do think we're looking at some very promising things coming here in the near term future. And that's going to be pretty much it. Stay tuned. We're going to talk about the Citadel 13F filings. We're going to talk about some other things later on today, including Melvin Capital and what is happening with that one. So hit the like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. Come join us on the live stream in between 10 and 11 p.m. Eastern Standard Time. Thank you guys for watching. I will see you in the next one.